What's going on, everybody? It's Jeff here. Welcome back to the channel. The market is getting divided once again. The Dow Jones has shaved off over 800 points since November 8th, all while the NASDAQ continues to reach all-time highs. This earnings season has been a bit different. Investors are getting very, very picky, and I feel like we are starting to see a little bit of toppiness happening in the market. I was getting very excited about a month and a half ago, getting back into our swing plays. As you remember, if you've been following my channel for a long period of time, I cut a lot of my long positions just with the uncertainty of what was happening with interest rates, the fact that the market was due for a little bit of a pullback, getting overextended, and everything that was going on with the debt ceiling. And now I'm feeling a little bit of the same sentiment. You have the small cap stocks that have been absolutely slaughtered this week. We're going to talk about that. All while AMC is continuing to fare very well compared to the Russell 2000. And you also have an earnings season that has been a bit of a tobacco happening. I'm going to break it down for you in a very simple manner, especially if you're someone that is new to earnings or a little bit confused why stocks can drop after good earnings or why stocks can pop after poor earnings. So in the simplest context for you, there are two main components that are factored into earnings. It's actual numbers. Where are the actual numbers and forecasts compared to analyst expectations? Because that can be priced in. And then there's also guidance. And in my opinion, the guidance is more important. And what that basically means is investors want to know exactly what you did last quarter, but they also want to know what you're going to do in the future. And a lot of times a company can produce, even miss on earnings just a little bit, but if they have very, very strong guidance, it's going to accelerate the stock to go even higher because investors are going to feel confident in the next quarter. You also have times where there's an earnings beat, but the guidance is a little bit off. And at times you will see the stock begin to pull back a little bit. And a lot of times that gets bought back up. But what I've seen differently happening this time around is you've seen companies that are missing just a little bit or even beating earnings, but providing a little bit different of guidance by saying, listen, we're going to decrease a little bit of our ad spend. Our revenue is expected to be a little bit less because we're focusing a little bit more on improving our infrastructure or logistics. And in a year from now, you're going to get even better results from that upgrade. And investors are saying, oh, no way. I do not want to invest in a company that's not going to give me a reward right now. And it began to feel a sentiment of natural greed that's happening. I've even seen stocks been beaten down after their earnings. And I'm looking at these earnings reports saying, okay, they might have beat, but they just missed a little bit on one or two things. And their guidance was not poor. And the fact that it drops down, I'm saying to myself, this will get bought back up because 95% of the time I've watched these exact situations happen before they get bought back up. And investors are completely staying away from it. So that's giving me a little bit of an uncertainty on where the strength in the market is going to continue to happen. The next thing I want to talk about, which we've mentioned numerous times on our channel, is the consumer price index. Inflation has gotten out of control and it was stabilizing a little bit in June and July around that 5.4, 5.3 area. And now you see the number getting in October of 6.2. It's to the point where it's getting a little bit out of control. If you see right here, these shaded areas, the shady areas indicate United States recessions. So every time you see this inflation, all right, become a little bit overextended, we've had a little bit of a recession. Look back here in 1990, you see 2000, even look at 2007, 2008, and now we're seeing that start to happen a little bit again. The other thing that gets me worried is the fact of the interest rates have still not risen. And while the strength of the market is very important to me on the short term, I can adjust my investment and trading strategy very quickly to still become a little bit profitable in times of a bear market. Now, maybe we're not going to get these small cap runners that run 100% from $3 to $7, $8, or $9. Maybe we're not going to get the Lucid to go from $27 all the way up to $60 in the matter of just a couple of weeks. But I can still adjust my, investing strategies and trading and play a little bit differently to still be profitable or at least hold my own and gain some on top of it. But right here, if you can see this, every single time a recession has happened, the Fed has cut their interest rates in order to help the economy. I mean, it's been all the way back since This goes all the way back to the 1950s. And you look at 2008, this was a severe drop, or I'm sorry, 2000 was a severe drop. 2008 was another severe drop. And we didn't get a chance to really raise the interest rates that much when COVID happened, but we've still dropped to that bottom base low. So we're sitting in a very different predicament here now where we've got inflation rising, the labor, the labor force is struggling still to get people back to work and struggling for workers. The supply chain issues are getting rampant out of control. And if the economy does start to go into a little bit of recession, we cannot drop these interest rates really any lower than they currently are right now. So I'm still getting back to a point of where I am still bullish on the market for the next few months in the short term. But my position of going back into the smaller day trades and just the very much smaller swings of maybe a day or two are going to be held a lot more, I think be a lot more functionality in the markets versus getting back into the long-term positions. Now let's talk briefly. As you can see, the SPY here, it's getting a little bit toppy around that 470 mark. All right, although it is forming a little bit of an ascending pattern to bust through that. But let's take a look at the Russell 2000. These are all of your small cap stocks that have been absolutely butchered. All right, down, I think about 5-6%, a little bit over, about 5% ever since we hit a high of just early November. And right now, being just ahead of Thanksgiving, this is the time for small cap stocks to run. It's called the turkey crack run. It's very well known. You can go ahead and Google it and look it up. But this is when your small cap runners really run hard. And we've been able to catch a few of them on a daily basis that are still running. They might not be all day runners. We had one today, GTEC. It was a little bit choppy throughout, but as you can see, it gave us some good opportunities off that, about that 850 base running with it. And here was another one, which is LGVN, which ran pretty hard yesterday, gapped up, and then kind of just stabilized throughout it. But we're not really seeing a lot of these small caps continue to run. Now, what I want to talk about now, just to finalize all of this, is where AMC is faring through this. So as I just showed you before, we watched that Russell 2000 pretty much getting beaten, but AMC is continue to be on this little upwards trajectory moving forward, trying hard to get through that $44 to $46 level of resistance. Volume still remains very low. If you look at today, this is one of the lowest I've seen in a very long time. 20 million shares traded. Somebody actually even point this out to me of GameStop, seeing it pop a little bit today. And at the time, I think there was only 600,000 shares traded, and you could see 3 million. It was a little bit more volume for GameStop today, but AMC was one of the lowest. Now, there's a few reasons for this, and one of them really ties back into, your retail traders just not playing the range here anymore, which is good because they are ones that will also bring down the stock. As you can see, pretty much today on a slow volume where the market was pretty sideways, we fared very well. The additional shorting isn't happening by the retail side. So all it's going to take is that the amount of buying pressure needed to get AMC to move has actually decreased because we don't have that sell pressure behind it. All right, it's natural supply and demand. When there's heavy sell pressure, supply pushing it down, you need a lot more demand demand to be able to get that price to move up. So when the price is stabilizing on very low volume, there's not a lot of selling pressure happening. It's going to only create a little bit of demand to really get that buying pressure to go up even higher. So I am very excited to see exactly where this stays out. And like I said, positions will continue to stay smaller for at least the near term. We did have some really, really good swings. And I think the two best were AMD and Lucid. So guys, that's it for this video. I'll see you in the next one.